Morning, Steve Free in Chicago with the morning grain comments. Well, prices overnight are a little bit higher, follow through from yesterday's bounce. Yesterday's rally was led by beans and soybean oil. Corn kind of followed while wheat ended lower in the nearby markets. Yesterday's market action was blamed in part to the fact that maybe Argentina is not going to drop their soybean export tax as much as feared, and that may not ship a wall of beans and meal onto the marketplace. So that caused a little bit of short covering. Market was also anticipating that the managed funds position put out by the commitment to traders report yesterday would show a bigger short position. That also triggered a little bit of short covering over some key areas in the bean markets. Lastly, I think the market is a little bit nervous about all the meetings that are going to happen soon. U.S. Fed meeting, European economic outlook meeting, and also the OPEC meetings. All these things helped contribute to a bounce in prices. I think in general, people don't feel the numbers suggest that soybean prices should move much above $9. $3.75 and corn is a similar price, maybe a 5 or 10 cents higher. And the wheat price $5 seems to be strong resistance. Wheat numbers really globally do not support a price above $5. In corn, you would think farmers selling here in the United States would pick up above the maybe $3.80 area, closer to $4. And in soybeans, as long as there's not a South American weather problem, we have too many beans in the world, and that probably is going to offer some resistance. Yesterday, the EPA put out their new numbers for 2015 and 16 renewable volume obligations. It's about 100 million bushels more corn. That was kind of in line with expectations and really shouldn't change the carryout that much. Over in oil, it could add about, let's say, 400 million pounds of this year's demand for soybean oil, which takes the carryout from about 2.3 billion pounds down to 1.95 billion pounds. But the big question in soybean oil is if Congress is going to pass the producer blend credit. If they do that before the end of the month, it could actually add 1.2 billion pounds more soybean oil use to take the carryout down to 9.45. So that's a big factor in whether soybean oil prices jump over 30 cents a pound. For the month of November, Brazil saw mostly normal rains up in Mato Grosso do Sul. It was more like 75% of normal. And so we're going to have to watch that area to see if some dryness will stress the crops there. And the traditional funds are now estimated to be short 53,000 beans, 24,000 meal, almost 100,000 corn, and 47,000 wheat. Yesterday, they bought 6,000 beans, 2,000 meal, 4,000 oil, 17,000 corn, and sold 6,000 wheat. So their position was bigger than expected, and they did cover some of that short yesterday, and not surprisingly, open interest dropped yesterday. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.